Welcome everyone to Vested Interest. This is Shane back again. That's right. We are wrapping up another month. So in this video, we're going to take a look at the 5 stocks I'm focused on for the month of May, and the same two ETFs that we've been buying all year. And those 5 stocks are Realty Income, Comcast, Enbridge, Starbucks, and Enterprise Product Partners. Those will be our main focus, not our only focus, but our main focus at least through May. While I feel like these or see these are presenting a little bit of value, trying to build out Comcast is a relatively new position, though we're over 100 shares now, and Starbucks is the newest position. So we're really focused on building this one out. But before we get into the video, for those of you who may be stopping by for the first time on this channel, we focused on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies, whether that's weekly, bi-weekly, whenever you get paid, once a month, once a quarter, once a year, whenever you get your tax terms, whatever that schedule is. But continually dollar cost averaging, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, and whenever I have additional funds, I also will drop large amounts in. I do some options as well. I cover all my investments into this portfolio on this channel. I do not have a paid Patreon account. I don't intend to ever have one. We all have enough to pay for, so it's free to see what I'm doing. But if you would like to help out the channel, if you would take a moment to hit that thumbs up down below if you find any value in this type of content. Are you a dividend growth investor? Make sure you hit that subscribe button if you have not done so. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community, excuse me, and make sure that notification bell is rung so that you are notified whenever we put out any new content. Doing that really does help with the YouTube algorithm. It helps get the videos out to more people. Watching the videos to the end also helps, and dropping a comment down below. So appreciate all of you out there who have subscribed and taken the time to hit all of the bells and whistles and thumbs and everything else down below. Really do appreciate it. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level and see if I am interested. We're not going to run through all of these metrics, but I do a stock pick of the day series Monday through Thursday if the market's open on those days. If the market's not open, I don't do it. On a stock that's pulled back on the day, sometimes we'll do subscriber suggestions or comment suggestions, companies that have been put down in the comment section as well in the stock pick of the day series, and we do use this screener to run through them. That's how I set up those stock pick of the day videos. So again, if you are interested in that, make sure you're notified. The notification bell is clicked down below so you're notified whenever we put out any new content. But we are going to run through some of these metrics in this channel for these companies that we're talking about for the month of May. First up on our list is going to be Starbucks Corporation, ticker SBUX. They closed out, and all of these numbers are going to be as of the close of business on Friday. Closed out the week at $88.25. 52-week range as low as $84.29, as high as $115.48. Definitely closer to their 52-week low than they are their 52-week high. They have a beta of 0.97. Analysts call this a buy. Currently, right now, they have a price target of $108.14 with a potential for 22.54% upside. EPS is sitting at $3.74 per share. Its current PE is a little elevated at 23.60, though their forward PE here at 20.65 is a little more appealing for this one. Dividend is $2.28 per year, so divide by 4 to get their quarterly payout, and they have a nice starting dividend yield of 2.58%. Ex-dividend date was May 16th with a payout, looks like it was or is going to be May 31st. So if you were to buy this now, you would be in line for the next dividend payout. Now, we're going to take a look at dividend yield theory here. To do that, we take a look at the 5-year dividend yield average of 1.94%. We compare it to its current 2.58%, right? 2.58%, or over here where it says forward, 2.58%, same number. And since it is higher, that speaks to some undervaluation for this company. It also provides a little bit of a margin of safety on this one, at least according to the dividend yield theory. Payout ratio is low at 57.75%. I like 75% or less, so beats that metric there. Now, for return on equity and return on invested capital, I typically like 10% or better. This return on equity is negative 51.3%. Now, I'm assuming that's because Starbucks continually opens new stores, so they use a lot of equity to start those new locations. I'd have to do some more financials or look in their financials and see if there's some other reason for that, but that is not a good number. I don't like that, but you'll find that for a lot of companies like this, McDonald's, some other ones that have to constantly use capital to equity to reinvest back into the business to open new locations, that sort of thing. Return on invested capital, though, at 27.87% is very good. That's much higher than the 10% I'm looking for. EPS growth, I like 5% or better. This is sitting at 17.57%, very high. Revenue growth forecasted at 10.46%. Very good numbers overall for this one. We're going to take a look at the financials. In the financials, if you were to go to Yahoo Finance or any site, you can go into the financials. You can look at their balance sheet, their income statement, their debt to equity ratios. Is their revenue growing over time? Are they paying down debt? Do they have more assets over liabilities? You should understand how to look at a balance sheet if you are investing in individual companies. If you don't want to do that, you should be buying ETFs so that you don't have to worry about that. Now, we are going to look at free cash flow. We want growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends. And as a dividend growth investor, I don't know about you, but I definitely want growing dividends. Going back to 2020 here, we can see 114 million in free cash flow. 2021 up to 4.5 billion. 2022 2.5 billion. 2023 to 3.6. So a little bit of cyclicality here, but you can see from 2020 to date, 2023 definitely growing free cash flow. You can also see they are repurchasing a lot of their own shares. Over 1 billion shares here in 2020, none in 2021, over 4 billion in 2022. That was a huge jump up. So even though your free cash flow looks like it went down from 2021 to 2022, that is more than accounted for in the additional repurchase of their own shares. That went down a little bit in 2023, down just below 1 billion, but we'll see if they continue this repurchase of their own shares. Overall, that's very good to see. I like it when a company is repurchasing its own shares. Now, I do, again, own Starbucks. I am long. I'm trying to build out this position. I only have 15 shares. I am up slightly at $6.15. My cost basis is $87.12 per share, up 0.47%. Currently have $1,323.75 is what the position is worth. I have $1,306.76 into the position. So Starbucks, that's the first one. Number 2 on our list, Comcast Corporation, ticker CMCSA. This is out of the communications sector, and if I didn't mention, Starbucks was out of the consumer discretionary sector. Now, Comcast Corporation, they closed out the week at $38.57. 52-week range as low as $36.43, as high as $47.46. Definitely close to their 52-week low than their 52-week high. A beta of 0.97, just slightly less volatile than the overall market. Analysts are calling this one a consensus buy. They have a price target of $49.56. That would be a 28.49% upside, potential upside. Earnings date was April 25th. Ex-dividend date April 2nd. And they paid out on the 24th. So they just paid out last week. If you were to buy them now, you would be in line for their next dividend, though you're going to have to wait until next quarter. Now they have earnings per share at $3.78 per share. PE is low on this one at $10.20 per share, though the forward PE is even lower, $8.68 per share. They do pay at $1.24 annually in dividends, divide by 4 if you want to know their quarterly payout, which is a nice starting dividend yield of 3.22%. They have a payout ratio under 31%. I like 75% or under, so very low payout ratio. Lots of room to continue to grow this dividend. And we're going to take a look at the dividend yield theory again. We'll look at their 5-year dividend yield average, 2.24%. We compare it to its current. They said 3.22 over here. This says 3.21. 0.01% difference isn't going to bug me. 3.21 being significantly higher than their 5-year average, again, speaks to some undervaluation, and not only undervaluation, but a significant margin of safety right now, at least according to dividend yield theory. Again, payout ratio very low. Return on equity sitting at 18.60%, much higher than the 10% I'm looking for. Return on invested capital just under the 10% I like at 9.79. EPS growth, again, on this one, very high, 13.45% forecasted over the next 5 years. I like 5% or better. Revenue growth is a little low, 2.21%. Good numbers overall. Let's take a look at free cash flow. 2020, going back to 2020, we see $13.1 billion in free cash flow. 2021, $17 billion. Bit of a drop here in 2022 to $12.6. 2023 back up to 12.9. Now let's see if that drop in free cash flow really stands the test of time or scrutiny. Repurchase of capital stocks. So you can see here they were at 534 million in 2020, then jumped that up in 2021 to 4.6 billion, and a huge jump up in 2022. So that even though it looks like it went from 17 billion in free cash flow down to 12.6, they significantly increased by almost 3 times what they were buying in 2021. So that more than accounts for the drop in free cash flow. Same thing in 2023 at 11.9 billion. Overall, definitely seeing growing free cash flow as well as a significant repurchase of their own shares plan here. And if they continue the numbers like you're seeing here, 2022, 2023, that's a lot of shares coming out of the market. Even 2021, 4.6 billion, 13.3 billion, 11 point, that's a lot of shares coming out of the market. Again, I am a shareholder of Comcast, ticker CMCSA. This is in my portfolio as well. All of these positions here this week or this video are in my portfolio. I do have 112.775 shares. I am down 8.54%, right? My cost basis is $42.17, so it's lower than my cost basis. That's part of the reason I'm looking to add to it. Plus, I want to build this out. I'd like to at least double this position here. 250, if not 300 shares of this one is where I'm trying to get to. Over 200 anyway. I have $4,755.75 into the position. I am down $4,349.73 total position, or down $406.02, 8.54% in the red. That is number 2, Comcast. Number 3 on our list, Realty Income Corporation, ticker O. This is a REIT out of the real estate sector. Closed out the week at $53.71 per share. 52-week range as low as $45.04, as high as $64.18. Beta of point, and it is closer to its 52-week low than its 52-week high. Beta of 0.94, just less volatile than the overall market. Not a whole lot though. Analysts call this a consensus buy, have an estimated price target of $61.50 per share with a potential of 14.5% upside. Excuse me. Earnings date coming up May 6th. Their ex-dividend date was April 30th. Looks like they're going to pay again on May 15th. Elevated payout ratio on this one, but really not concerned with that. REITs are required by law to pay out more than 90% of their free cash flow, and this one always looks wonky. I don't know exactly why, but it always does. Now, EPS sitting at $1.26 per share. Price to earnings, again, going to look really high, but you do not want to look at price to earnings on REITs. You want to look at funds from operations. Forward PE, I don't even worry about it. Again, you should be looking at funds from operations. Dividend is $3.08 paid out on the year. They are a monthly payer, so divide by 12 if you want to know what that breaks out to be. Excuse me. Very nice starting dividend yield on this one of 5.74%. Very high. Now, we're going to take a look at dividend yield theory. Again, 5-year dividend yield average, 4.52% compared to its current of 5.74%. Speaks to undervaluation with a nice margin of safety. Again, at least according to dividend yield theory. Return on equity and return on invested capital are going to look very low on this, but you want to compare this to other companies in its sector. So companies like maybe other REITs, like Vici or NNN, maybe Agree Realty would be another one that you compare to, and it does compare well. Return on equity at 2.8%, return on invested capital at 2.85%. EPS growth, I like 5% or better. This is forecasted at 7.83%. No revenue growth was listed. We're going to look at free cash flow here. We want growing free cash flow over time because, again, we want growing dividends. Going back to 2020, 1.1 billion in free cash flow. 2021 up to 1.3. 2022 up to 2.5. 2023 up to 2.9. Nice, steady free cash flow growth. Not only that, they are significantly paying down their debt. Now, these, especially the last couple years, right? Now, these numbers don't necessarily mean anything unless you go in and look at their issuance of debt and their overall debt and see if it's going up or down. Because just because they're saying they're repaying debt, if they, let's say they paid 79, this is really 79 billion here, paid 79 billion. If they issued 84 billion in debt that year and only paid back 79, that really would be an increase in debt, right? So you want to be looking at their overall increase or decrease in debt, not just whether they're paying it back. I would like them to start repurchasing some shares here. Realty Income is one of those companies, like all REITs out there, business development companies and a couple others. They do issue stock from time to time and dilute you as a shareholder, but it is part of the way that they raise capital for new projects. Again, I own all of these companies in this particular video, so I am long Realty Income. I currently have 237.818 shares, right? I am down 8.5%. I have $12,773.20 into the position, down $1,118.98. It's currently worth, or I'm sorry, I have $13,892.18 into the position. It's currently worth $12,773. I am down, how much am I down? 0.17%. So not, no, 8.05%. Sorry, it's down 0.17% on the day on Friday. I am down 8.05% on this position. So that's part of the reason I want to add to it. I want to bring down my cost basis, bring up my dividend yield, bring up my potential future return. A lot of REITs getting hit hard right now is because the market is going to, inflation in general is elevated. It stayed elevated for quite a long time. I think the market's going to stay with higher interest rates for longer than most people had thought, and the Fed is not going to be lowering rates anytime soon. Maybe I will say again, by the end of the year, if inflation does indeed get under control. That's just my opinion. All right. Number 4 on the list, Enbridge. Enbridge Inc., ticker ENB, out of the energy sector, closed out the day at $35.82. 52-week range as low as $31.03, as high as $40.30. It is kind of floating right in the middle, though it is a little slightly closer to its 52-week low than its 52-week high, though there's not a big spread between the two. A beta of 0.89, so it is less volatile than the first three. Analysts call it a consensus buy. They have a price target of $56.83 with a potential of 58.65% upside. Earnings date on May 10th. Ex-dividend date was May 14th. It doesn't look like they have their next their payout listed here. Should be sometime in May, I believe. No, I don't know why they don't list it. They list the ex-dividend date, but they don't list the payout date. I think it's sometime in May. EPS is at $2.08 per share. PE ratio $17.26 per share. Not bad. Forward PE even better at 12.57%. Dividend $2.67 paid out on the year. They are a quarterly payer, so divide by 4. Very high starting dividend yield on this one, 7.45%. Payout ratio is elevated at 125%, so you want to watch this one, right? Now let's take a look at dividend yield theory. To do that, look at the 5-year dividend yield average, 6.8%. Compare it to its current forward annual dividend, or current, 7.45%. It says 7.46 here. Again, I'm not going to worry about a 0.01% difference. But according to dividend yield theory, it speaks to undervaluation with a nice margin of safety. Return on equity, 9.4%. I like 10% or better, so it's just shy there. Return on invested capital at 4.69%. I'd like better numbers there. This one to me is like holding a high yield bond with some upside as far as price appreciation. That's part of the reason I hold this, and it's an energy play. Enbridge not only has oil and gas, but they are expanding out into wind and solar and some renewable energy as well. So that's part of the reason I like this one. It's a big company up here by me in Michigan. They're really a Canadian company, but they do reach out here into the United States as well. EPS growth, I like 5% or better growth. They're sitting at 4.55%, so just slightly under that. They did not have revenue forecasted growth. We're going to look at free cash flow. Again, I want growing free cash flow over time because I want growing dividends over time. 2020, $4.1 billion. 2021 dropped down to $1.1 billion. 2022 back up to 6.4. 2023 to 9.3. So short of 2021, nice growing free cash flow. They are repurchasing some of their own shares, especially the last few years. I'm long Enbridge. Not sure why it didn't. Yeah, Enbridge, 217.25%. 217.25 shares. Another one I'm down on, 4.09%. I have $8,113.39 into the position. It's currently worth $7,781.90. I am down $331. So not down huge, but that's another one I'd like to increase my position on, decrease my cost basis, increase my dividend yield, and increase my potential future returns. And last but certainly not least, Enterprise Products Partners, ticker EPD. This is a limited partnership. That's what that LP means, right? So there are some K1 tax implications around this one. You'll get a K1, I believe is what they call it on this. They will treat the dividend payouts just like your regular income. So whatever your income bracket is, 20%. Mine's like, I think 32 or 33, whatever the highest income bracket is. That's what mine is. So that's what I pay my interest on. But so some people might not like what I'm getting at. Some people might not like that because it's taxed as individual or income, regular income. Close out the day on Friday at $29.06. 52-week range as low as $25.19. 250. No, as low as $25.19, as high as $29.99. You'll see not much of a spread here between the 52-week low and the 52-week high. It is closer to this 52-week high. That's all right. A beta of 0.99, so it is just a tick under the overall market volatility, but I mean pretty much equals the volatility of the market. Analysts call this a strong buy. They have a price target of $32.73, so they see some upside, potentially of 12.63%. Earnings date was April 30th, or coming up here April 30th, next week. Ex-dividend date, April 29th, same thing, coming up here. What is that? Is that Monday? I think that's Monday. And the payout, is that the payout? April 4th. Yep, dividend payout of May 14th. So they're going to pay out in May. Now, 78.57% payout ratio is a little higher than the 75% or higher that I like. But again, limited partnership, they typically pay out more than a regular dividend paying company, right? So not terribly concerned with that. Now let's take a look at dividend yield theory. 5-year dividend yield average is 7.8%. Current is 7.09%. So this one, at least according to dividend yield theory, is actually potentially overvalued, right? Their current 7.09% is lower than their 5-year dividend yield average. So this one is potentially overvalued, at least according to dividend yield theory. I'm going to still add here. I want to build out this sector a little bit more in this position in general. So I know it may be a little overvalued or fair valued, whatever you want to call it. This one for me, I'm going to be adding to. Right? I'd love it to pull back a little more, back towards that 52-week low, but for me, I might just nibble on this one. I'm not going to dump a lot in, but I am going to add to this position. I think I added some about a month ago. Same thing. It's just one of the positions in the energy sector that I want to continue to build out, and I'm going to hold it for the long term. So I'm not concerned with where it's currently at, so to speak. It is what it is on this one. You don't have to follow me on any of these plays. Return on equity, again, I like 10% or better. ROE on this one, 20.4%. Much higher, twice as high as what I'm looking for. Return on invested capital, like 10% or better, 11.37. EPS sitting at $2 or 2.33%. I like 5% or better, so that is a little low for me. Forecasted revenue growth at 3.02%. Very good numbers overall. Again, I'd like it to be undervalued, but this is just one that I'm willing to pay a bit of a premium on. Enterprise Product Partners, limited partnership here. Free cash flow growth, we're going to go back to 2020 here. 2.6 billion, 2021 6.2, 2022 6, 2023 4. It does look like over the last couple years they've had a little bit of decreasing, though overall from 2020 to 2023 you're seeing an increase. And this might be partly because oil and gas were up significantly in 2021 and 2022, and it is starting to even back out, back to where what should be considered normal. Even though gas is elevated right now. 2021 and 2022 gas prices were really elevated, so I can see why it went up in 2021, up in 2022, and is coming back down. But overall, 2020 to date, we are seeing free cash flow growth. Repurchase of its own shares, they are repurchasing their own shares as well, so I like to see that. I own this one. I'm long. I own 232.093 shares. I am up 17.33%. That's part of the reason I don't mind adding here. My cost basis is so low. My cost basis is $24.77 per share. So I'm going to bring up my cost basis on this one a little bit, and that's really part of the reason I'm willing to buy. My cost basis is so low, right? It's lower than the 52-week low, so I don't mind bringing it up to the $25, $26 range I am up again $996.63. I have $5,748.59 in the position. It's worth $6,744. So again, if my cost basis wasn't so low, I probably would not look to add to this one, but that is part of the reason. Now on to the two ETFs, and they're the same ETFs, guys. I'm going to be adding one share of Schwab US Dividend Equity ETF, ticker SCHD. This is a dividend growth ETF every week. Next one as well, VTI, and probably not just through 2024, but on into 2025 and 2026 and 2027 until I really build out those positions over the next several years. And then I'll probably back off once I get to, several hundred shares in each one. But Schwab closed the day out. Ticker SCHD closed the day out at $77.48 per share. It does have a $2.67 dividend, 3.45% dividend yield. Ex-dividend date is March. I'm not sure. I think they pay out in March as well. Payout ratio is low at 50.70%. Price to earnings ratio is low at 14.7%. Expense ratio is low at 0.06%, and that's one of the things you should focus on whenever you look at ETFs. If you're paying someone to manage your money, make sure you're paying as little as possible. That's why part of the reason I like Schwab or Vanguard ETFs is they usually have a very low expense ratio, 0.003 for some of the Vanguard funds out there. Schwab, same thing, very low payout ratios. Now, beta of 0.77, so less volatile than the overall market. 52-week low as $66.67. 52-week high, $80.82. I'm not concerned where it's at. I'm going to be buying whatever the price is. Holdings, 103 holdings. So you should look at the holdings and see what you have inside of ETF if you were buying one. Inception date is the date it was created back in 2011, October 20th, 2011. And over here on the right, I have the top 15 holdings. I did not put them all in. Ticker CVX is Chevron Corporation. It's 4.2% of the portfolio. Texas Instruments, ticker TXN, is 4.19%. PepsiCo, ticker PEP, is 4.15%. Lockheed Martin, ticker LMT, 4.15%. The Coca-Cola Company, ticker KO, 3.98%. Cisco Systems, ticker CSCO, makes up 3.9%. United Parcel Service, ticker UPS, at 3.88%. Verizon, ticker VZ, at 3.85%. Amgen, ticker AMGN, makes up 3.84%. Pfizer, ticker PFE, makes up 3.8%. Bristol Myers Squibb, ticker BMY, makes up 3.75%. AbbVie, 3.65%. Ticker ABBV. BlackRock Inc., ticker BLK, 3.68%. The Home Depot Company, ticker HD, makes up 3.45%. And EOG Resources, ticker EOG, makes up 3.29%. Again, long this one as well. 18.084 shares, down slightly to 0.17. I have $1,401.15 into the position, down $2.25, or $1,403.40 is what. I'm sorry, I have $1,403.40 into the position. It's currently worth $1,401.15. I don't know why that was so hard to say. And the last but certainly not least is the other ETF that I will be adding regardless of the price, once a week, one share at minimum, Vanguard Total Stock Market ETF. This is all of the companies in the New York Stock Exchange, ticker VTI. Close out the day at close out the week at $251.78 per share. Low expense ratio, 0.03%, even lower than SCHD. Price to earnings ratio, PE ratio, that's the market. The market currently is 23.68%, right? So that's the New York Stock Exchange. All the companies in the stock market are currently sitting averaged out at 23.68%. So if you can get individual companies with a lower PE, you'd be under the market, right? Dividend, well, the dividend is $3.54. They are a quarterly payer. They pay out in March. Dividend yield 1.41%. Low dividend yield. Very low payout ratio, though, as well, 33.27%. 1-year return, 25.42%. 52-week range as low as $249.46, as high as $252.54. I don't care that it's closer to its 52-week high. This one I'm buying once a week, right? I don't care what the 2-week low or 52-week low was $200.20. The 52-week high was $261.70. That was the day's range, the daily range. And again, but I don't care where they're at, even though they're close to the 52-week high. I'm just buying one share beta of 0.102. So they say it's just a tick more volatile than the overall market, which is weird because it's basically the market. 3,710 or 3,719 holdings. Inception date was May 24, 2001, so it's 10 years older than SCHD. Over here to the right, you can see the top 15 holdings. So it's Microsoft at 6.13%, ticker MSFT, Apple at 4.94%, ticker AAPL, NVIDIA 4.21%, ticker NVDA, Amazon, ticker AMZN at 3.31%, Meta Platforms, ticker META at 2.1%, Google. And these are going to be, because there are two different types of shares for Google. So these are the GOOGL shares at 1.75%. Berkshire Hathaway, same thing. There's two types or three types maybe even. Berkshire Hathaway, these are the B shares, BRKB at 1.46. Here's another alphabet. This is a different type of shares. Google, ticker GOOG at 1.44%. Eli Lilly, ticker LLY at 1.31%. Broadcom, ticker AVGO at 1.22%. JP Morgan Chase, ticker JPM at 1.13%. Tesla, 0.93%. TSLA, ExxonMobil at 0.91%. XOM. United Health Group Corporation, ticker UNH at 0.9%. And Visa rounds out the top 15, ticker V at 0.86%. I have $4,290.08 into this. I am up slightly, 0.9%. It's currently worth $4,251.95. Oh, I do that backwards almost every time. I have $4,251.95 into the position. It's currently worth $4,290.08. I'll get that right one of these times. I currently have 17.039 shares. Again, I'm buying this one once a week, regardless of what the price is. You don't have to follow me on any of these plays. This is just what I am doing in May. Drop a comment down below. Let me know what you are doing for the month of May. What ETFs or individual positions are you looking to add to or build out in your portfolio? These are some other companies, and there's a lot of them out there right now that I feel like are also presenting value, and I may nibble on some of these throughout the month. Even though those top 5 are the ones I'm focused on, it does not mean they're the only ones I'm going to add to this month. Pfizer, I feel like that one's still looking pretty attractive. Verizon is down below my cost basis again, back in the $30 range. I think that's looking attractive. Gilead, American States Water Company, Vale, Cisco, HP Inc., Johnson & Johnson, CVS, American Water, Nutrien, AG Solutions. There are others, but those are some other ones that I think are presenting value right now that you might want to look at as well. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comment section below. Also, let me know what you are looking to buy in the month of May. Would love to hear from you. And let me know what you think of the video. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount uncomfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice comes certified financial advisor.